Hello and welcome, investors and traders out there. This is Seth, former investment advisor at a Fortune 100 company, now bringing to you options education from the comfort of your own home on YouTube. One of our last videos talked about a stock refresher. We talked about how Apple, from October 18th to December 13th, went up by 16%, 16.5%, for a nice profit of $3,900 on a $23,600 investment. So we invested 100 shares at $236 for $23,600 investment. 8 weeks later, Apple was trading at $275 instead of $236. So we could have sold yesterday at yesterday, which was December 13th, 2019, at $27,500 for a $3,900 profit. And obviously, you got to pay taxes on that and things like that. And disclaimer, none of this, please don't construe any of this as investment advice. Please talk to your investment advisor before placing any trades. Basically, I wanted to set this screen up so that I can show you the difference between buying the stock and buying the option on the same exact days with the same exact prices. So in another video, I'll put a link down in the comments section, in the description, to show you the video to see what a call option is, so you can actually follow along with this. But here we go. Once you've watched that video and you know what a call option is, here's the example that I've provided. This is actually a real life example. It's a real life theoretical example. I didn't actually place this trade, but this is something that you could potentially have done. So on October 18th, 2019, when Apple was trading at $236, right? So it was trading at $236 on October 18th, and it was trading at $275 on December 13th. So when Apple was trading at $236, the call option with the strike price of $235 expiring on January 17th, 2020, so we're looking at roughly a 3-month option here, was trading at $12. So for the right but not the obligation to purchase Apple stock at $235 anytime between October 18th and the expiration of January 17th, 2020, for that privilege, you had to pay $12 a share. Now, as we know from the other video, every options contract is 100 shares. So this options contract is going to be $1,200. Now, let's say you bought $23,600 worth of these $1,200 contracts. So roughly, what would that be? That'd be roughly 20 contracts, maybe a little bit less. But the point of the $23,600 is to make it an apples to apples comparison with how much you invested with the stock. Remember, you invested $23,600 with the stock on October 18th. Let's say you invest $23,600 on the option on October 18th, 2019. Okay? So Apple has done extraordinarily well, as has the overall market in the last 8 weeks. And today's, again, December 14th. Yesterday was Friday, December 13th, 2019, the last Friday the 13th of the decade, as my yoga instructor reminded us yesterday. So the stock is now $275, right? It went from $236 to $275. That's a 16.5% increase. That's a great increase. Now, the call option, the same $235 call option, expiring on January 17th, 2020, all this stuff right here is the exact same. It's the same call option. Nothing has changed. The only thing that has changed is the premium. So the premium has gone from $12 to $40. And you can imagine why, right? The intrinsic value of a $235 call option is about $40. So, because if you were to exercise this option right now, so buy Apple stock at $235, you could immediately turn around and sell it for $275, therefore locking in a $40 gain. Hence, to be honest with you, I'm a little surprised the option is only trading at 40. It should be higher, but let's call it $40 right now. So let's say that before this expires, you want to figure out, okay, so you bought roughly 20 contracts. Again, this is for the sake of simplicity. You can't really buy exactly 23,600. You would have had to buy $24,000 worth of. But for the sake of simplicity, we're just trying to illustrate how much you can make. So you bought it. You bought the options for 23,600. Now you have a little less than 20 contracts at $40 per share. Guess how much that is? That's $78,667. Okay. Now you went from 23.6 to 27.5 when you bought the stock. You went from 23.6 to 78,000 when you bought the call. Okay. Now again, this is one example. There are other examples where this 23,600 goes to zero. There are many examples of that. But if 4 months ago you were really sure that Apple was going to increase in price, especially this much, and you bought this option, you would have made $55,000 on a $23,000 investment, which is a 233% return versus a 16.5% return. Okay, that's why options traders. There are some, definitely by no means all. There's some options traders that make a ton of money doing this, and part of it's luck, all of it's timing. Yeah. So I just wanted to give you this one. This is I did not. I wish I had placed this trade, but I did not place this trade. But yeah, I mean, look, I don't think anybody would be upset with a $3,900 return, but I think all of us would agree that obviously, we'd much rather have a $55,000 return. For a lot of people, that's an annual salary that you made in 8 weeks that hopefully you have the stomach for. So anyway, I just wanted to give this example. I will give another example of how your money can go to zero, and trust me, there are lots of ways for your money to go to zero or for your 23,600 to go lower. Okay, but this is an example of how options can really magnify your gains. All right? Thanks a lot. See you next time.